It's Wednesday the 18th, and we had another day where we saw lower highs and lower lows in the S&P 500. We are below the declining 5-day moving average, and we are very oversold. But again, that doesn't mean we need to bounce. We did undercut the prior low, which is kind of what I was hoping we would do, and then close back above it. So it's possible now, and I've said this yesterday, it's possible that maybe we get a turn, but the evidence simply isn't there. So we're going to be prudent and wait for evidence before we just blindly buy just because a prior low was undercut or anything like that. The bigger picture remains bearish. We came down to that trend line. So far we're holding above it, but we've held above volume weighted average price levels for a day or two before they were obliterated as well. So we have to maintain our vigilance as far as risk management goes. The market is in a downtrend. We made it right up to the week to date volume weighted average price here at the end of the day after finding resistance there in the morning as well. So these levels are clearly something that you can use to trade against if that's what you're doing very short term. And we saw the same thing in the NASDAQ. The volume weighted average price for the week was resistance first thing in the morning and then again late here in the day, and we still remain below the volume weighted average price from this gap, from that gap, and below a declining 5-day moving average, or below the declining 10, 20, 30, 40-week moving average. The Russell 2000 made another lower low here today, and now down to the volume weighted average price from the '09 low. And maybe we undercut this low right here from 16. It's certainly a possibility. I'm not betting on that, but again, we have this market underperforming as it is below the week to date volume weighted average price as well. The semiconductors also closed well below that week to date volume weighted average price, also below the declining 5-day moving average. And on the daily time frame, another lower low and lower high. Weekly time frame, we're also down to the 2016 volume weighted average price here. In fact, getting very close to the volume weighted average price from the 2015 low. So it seems like an area where we should find buyers, but so far the evidence simply is not there. We are, of course, again, below a declining 5-day moving average, guilty till proven innocent. You'll never catch the low by trying to trade with the direction of the 5-day moving average, but you're never going to get the low any other way either. So, unless you just make that one lucky guess. The biotechs are a little bit relatively stronger. They closed right at that week-to-date volume-weighted average price in the declining 5-day moving average. In order for this market to become more neutral over the intermediate term, we need to see it up above here. We don't want to see it rally up, right through it. We'd rather see something like this, where it rallies up, pulls back, test that 5-day moving average, and then maybe we could get a bounce. But right now, again, we remain in a market that is broken at year and a half lows in there, multi-year lows for other markets. The financials also, they're coming down close to the '08, '09 lows volume weighted average price. We do see that, we're still below the volume weighted average price from the 12 lows, and over to the 15-minute time frame, again, below the week to date volume weighted average price, below the declining 5-day moving average, below every single thing that really matters right now that would indicate buyers are regaining control. So there just isn't any evidence at all in these markets that buyers are stepping in and gaining control. So we'll maintain a strong defensive stance.